CEO and CIO of ARK Invest. OpenAI is now the third largest position in the ARK Venture Fund. Cathie, it's great to have you on. Welcome.
Thank you, Morgan. Happy to be here. Happy to see you.
So I want to start right there because this was a record fundraising round. We know there was a lot attached to this fundraising round, including a promise of a conversion to a for-profit entity. Why did you feel it was compelling to invest now and at this valuation?
Well, we've been doing work on AI for 10 years, and we've been waiting for the companies that were really that Nvidia was going to hand the baton to. Not that Nvidia's story is over at all, but as you know, Nvidia has basically been communicating, and investors have been buying a very big idea. And for Nvidia to continue to work, we think there are going to be other winners. We think that the foundation model players are going to be very big winners, $15 to $20 trillion in market cap in the next 5 to 10 years. We put out a piece in our Sunday newsletter you can find on ark-invest.com, and we're going to put out a lot more on this. So OpenAI leading the charge, really, Anthropic, XAI, so Elon Musk and team, and even Elon, I think, is saying those three, and Google with Gemini are the big four. And, you know, unlike the railroad era, when many people are comparing this to the railroad era, I think that the four winners are showing themselves very quickly. Whereas in the railroad era, which, by the way, accounted for 63% of the stock market in its heyday in the early 1900s, unlike the railroads, there were hundreds. I think there were hundreds. We can focus on the big winners. This space is moving so quickly and is going to become so big because it's effectively substituting software for labor. Not that this is going to kill jobs at all. It's going to make people much more productive. And they're already seeing it with ChatGPT just as a starter.
And of course, the four companies you just mentioned are all companies that you are invested in through your funds. I mean, you mentioned XAI. It's been interesting because Elon Musk, co-founder of OpenAI, has been very vocal, very critical of where OpenAI is headed and the direction in which Sam Altman is taking it. Do you disagree?
I think what he's talking about is more about the history of the company, and we're looking at the future. And I was happy to hear that he did mention, of course, OpenAI as one of the leaders. Of course it is. So, you know, we're just looking to the future. I know there's a history there, and, you know, what's done is done. And we're just looking forward, trying to figure out who are going to be the big winners in this space.
Cathie Woods goes on the record to note how Nvidia is providing trillion-dollar opportunities for investors and how the AI sphere is still ripe for achievements. Celebrated for its staggering 171% stock price increase last year, Nvidia is now teasing even more groundbreaking developments. This tantalizing prospect revolves around Nvidia's strategic alliances with industry titans like Amazon and Tesla, marking the dawn of an AI-powered revolution. Stay tuned as we delve into this electrifying narrative and explore how Nvidia is poised to redefine industries and generate monumental growth. Welcome back to Investocracy.
Cathie, I want to look back at the Innovation Fund for a moment. Over some periods of time, see the S&P is up 34% over a year, beating ARK Innovation by 14 points, 94% over 5 years, beating that fund by 84 points, 191% over 10 years. That's for the S&P, beating the Innovation Fund by 64 points pretty much since inception. What do you say to investors who look at that performance and doubt that you're making the right calls?
Yes, I would say, first of all, our compound annual rate of return since inception has been nearly 10%. We went through a boom in 2020 during COVID, where we were up 360%. And we had valuation and interest rates and concentration in the markets working against us. We are a diversified exposure to innovation, truly disruptive innovation. I would focus people on the fact, and looking at your chart there, that if you take away that boom and bust, what we have now is three forces working for us and a long base. Again, you take away, you can say we have a base after that period. You can look since 2018, we've been basing. And I remember saying this with Tesla at the time. The longer the base, the bigger the breakout. And we certainly were right there. The three forces that I think are going to become tailwinds now, they have been headwinds. Interest rates, they're coming down. And I think despite what we saw in the employment report today, I do think that they will come down more than people think during the months ahead. The second is the concentration in the market towards the Mag 6. That is starting to dissipate, and I think that will work in our favor. And then the third is valuation. During August, when the market got hit, our valuation, as measured by enterprise value to EBITDA, dropped to nearly a market multiple. We were basically sitting on a market multiple at 21 times EBITDA, enterprise value relative to EBITDA. Now, we do adjust it for stock-based compensation, which is really important when it comes to innovation, alignment with shareholders, as well as normalize R&D. But that valuation typically is twice the market's, and we hit the market.
Nvidia is a cornerstone for tech behemoths like Amazon and Tesla. In fact, the company's most recent fiscal showing broke records with revenues soaring to a jaw-dropping $35 billion, a significant leap from the $27 billion recorded for the whole of fiscal 2023. A particularly riveting moment was Huang's forecast for the autonomous vehicle sector, predicting it to blossom into the first multi-trillion-dollar robotics industry. With over 1 billion vehicles on the roads globally, many ramping towards increased autonomy, this prediction could very well map the trajectory of a booming sector. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Our confidence, if anything, has increased because of what's happening with artificial intelligence. Finally, ChatGPT captured the imagination of the investor. We had been talking about artificial intelligence since the firm started in 2014. And we had been very focused on Nvidia as the pure play in this space. So we were there when Nvidia was 5. We're on to the next thing now. And I would say you're picking early 21. The drop from early 21 in our strategies to the low was worse than the tech and telecom bust, which makes no sense. Back then, the technologies weren't ready and the costs were too high. We didn't have the cloud, we didn't have deep learning and AI, we didn't have transformer technology. We were not ready for prime time and the costs were prohibitive. Today, and yet, investors were chasing the dream back then. And that ended badly. Today, talk about investor psychology. We're ready for prime time. The dream is no longer, it's a reality. And investors are so fearful. And so we think that the surprise element out there, as our companies take off and, harnessing these new platforms, the element of surprise is going to be significant, and we will earn our way back into portfolios. There are many who stuck with this and averaged down all the way. We think they will be rewarded handsomely if our research is correct. We think it is correct. Of course, we could always be wrong.
So the big story, you mentioned AI. Let's just stay on that topic. I look at your largest holdings in your main ARK fund. I see Tesla, Coinbase, Roku, Zoom. I know you've talked about Tesla and AI, Nvidia and AI, but describe AI's exposure in your portfolio. Where does it help other than Tesla, which you've talked about before, Nvidia? Look at all these other ones we've got here: Twilio, Roblox, Unity, some of the other ones, Block as well. Speak about it broadly and where it fits in here.
Sure. Most of the stocks in our portfolios are there because we've used an AI lens. Now, we wrote a paper called Investing in Artificial Intelligence, Where Will Equity Value Surface? It's on arc-funds.com. Now, I think many people feel comfortable. They're on the right horses, the mega cap tech companies or the Magnificent Seven, one of which is Tesla. So we clearly agree with that one. We are not sure when it comes to the others. We think that AI is going to be highly disruptive, is going to disintermediate some of these platforms, not all of them.
For investors, these developments are a goldmine of potential. Nvidia's autonomous vehicle solutions, which have already carved out a $5 billion annual revenue run rate, illustrate the company's strategic foresight. The launch of Thor, Nvidia's next-gen car computer, is groundbreaking. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
And you'll hear four variables that we think are critically important as all companies approach AI and try and figure out, how can I harness the productivity gains from this new technology? One is they have deep domain expertise. They obviously know what they're doing, and they have a vision about where their own technology and company is going in the future. They have artificial intelligence expertise. They're taking this seriously. They have good distribution, preferably global, not always. And then most important beyond that, they have proprietary data. And most of the companies you'll see in our portfolios have proprietary data that no one else has that they can use to help their customers. Twilio is another example, 1 trillion business consumer interactions every year and growing at an accelerated rate. They can help marketers and salespeople understand, hey, these were the interactions that caused movement towards your company or your product. That is very valuable information that nobody else has.
As Nvidia continues its upward trajectory, harnessing the power of AI to open new frontiers in technology, the investment narrative grows ever more compelling. Nvidia isn't just a chip designer. It's evolved into a futuristic platform provider for emerging high-growth sectors like autonomous vehicles. Of course, stocks don't climb indefinitely without pauses along the way, yet the company's robust positioning in AI suggests enduring high-flying potential. So what's your take? Are you gearing up to catch this exhilarating wave of innovation, or will you let this opportunity zoom past like a highly autonomous vehicle on a fast lane to the future? Share your thoughts. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.